There has been an alarming rise of frauds that puts India's booming peer-to-peer P2P lending market at risk. And the question arises, can innovative tech be the answer to this growing problem? Welcome to Varindia NewsHours. Peer-to-peer P2P transactions have indeed become increasingly common, facilitated by smartphone apps that allows users to send and receive money easily. These transactions are often used for splitting bills, repaying friends, or making purchases, providing a convenient alternative to cash or credit cards. However, with the rise in popularity of P2P payment apps, there has also been an increase in scams and fraudulent activities targeting users. Some common payment app scams include impersonation scams. Scammers may impersonate someone you know or trust, such as a friend or family member, and request money for a fake emergency or unexpected expense. Phishing scams. Scammers may send phishing emails or text messages posing as a payment app provider, asking users to provide personal or account information. This information can be used to gain unauthorized access to the user's account. Fraudulent transactions. Scammers may use stolen payment credentials or hacked accounts to make unauthorized transactions. Users should regularly monitor their account activity and report any suspicious transactions to the payment app provider. QR code scams. Scammers may create fake QR codes that, when scanned, redirect users to malicious websites or prompt them to send money to the scammer's account. India's peer-to-peer P2P lending industry is on a meteoric rise, projected to reach a staggering 5.5 trillion rupees by 2025. While these growth attacks investors, a dark undercurrent threatens its substantiality, like fraudulent activities. Alarmingly, 25% of Indian P2P investors report encountering scams, with an average loss of 20,000 rupees. This growing threat not only erodes investor confidence but also puts platforms at risk of non compliance with strict RBI regulations. However, innovative technology offers a ray of hope. Let's look into today's headlines. Indian government requests tech companies to obtain authorization before releasing AI models, while IT Minister Rajiv Chandrasekhar stresses government certification and revealing of AI models that are still in trial. Criticism surrounds Google's AI platform. In order to avoid fines, platforms operating on India's public internet must obtain user consent and provide security. The recommendation advises the entities to apply for government approval before using artificial intelligence models that are still in trial or that are not very trustworthy. Meta starts testing the Threads API. Public release is anticipated in June. With a limited number of outside developers involved, Meta has started the Threads API testing phase. Jesse Chain, a Meta engineer, states that the API's goal is to make content publication on threads from other services easier. A possible public release is planned for the end of June, although testing takes place beforehand. Update iOS 17.4 to fix issues with video conferencing. This week, Apple is expected to release iOS 17.4, an update that fixes video conferencing issues brought on by the Reactions feature. The decision follows an incident involving Senator John Fetterman, where virtual confetti was unintentionally activated during a Zoom interview. The next version will have an API that lets developers turn off reactions by default. Over 67 lakh bad Indian accounts are banned by WhatsApp in January. In accordance with IT Regulation 2021, WhatsApp cancelled an astounding 67 lakh bad accounts in India in January during a digital crackdown. Out of 14,828 complaints, only 10 accounts were investigated. The Grievance Appellate Committee was established in India in line with the spike in bans. The committee's goals are to give social media users more authority to report content violations and to support digital law enforcement. Kashmir launches a new startup policy. Manoj Sinha, the Lieutenant Governor of Jammu and Kashmir, launched a new startup policy aimed at fostering entrepreneurship in the area. The goal of the new Jammu and Kashmir Startup Policy 2024-27 is to establish 2,000 new businesses by the year 2027. This policy provides a number of initiatives, including financial support for mentorship, patent help, facilitating DPIIT registration, and other activities. That's all for now. Please like, share, comment, and subscribe to VAR India magazine. You can download the VAR India app from Google Play Store and Apple App Store for more news and updates. Stay tuned. Thank you.